This is your economic review. This morning, we're joined by Wahomengari, financial literacy coach. Good morning, sir. How are you doing?
Very well, Simba. How are you?
I'm okay. Happy to have you around.
Good to see you with that energy in the morning.
Always is, sir. Always is. All right, data. But the Central Bank of Kenya indicates that dollar deposits in bank accounts of rich Kenyans shot up by 129 billion shillings last year, coinciding with a period when the shilling declined sharply against the dollar. Central Bank of Kenya data indicates that the value of the dollar deposit stood at 740.6 billion in December, which represents a 21% jump from the 611.2 billion shillings in January. Good. Let's look at that data, therefore, just to indicate exactly what the trend in terms of foreign deposits in the country, what they have been, which if you could run that data for us this morning. Good. And you can actually see that all the way from March 2018, when they were at their lowest, all the way to June 2020. I'd like to see that jump between December 2019 to March 2020 as well, when we actually jumped all the way to 752 billion, and then June 2020 again jumped to 790.68. Now that is where the conversation comes from. Now, Mr. Wahomengari, I mean, yes, how was this trend again supported by the decline of the value of the shilling against the dollar, which saw it trade at 109 shillings during the period under review?
When we talk about the period under review, we need to understand dollar inflows and dollar outflows.
Yes.
Now, we're looking at a period when COVID has actually affected our economy. We've seen dollar inflows through tourism really come to an end. And, you know, we get a lot of dollar inflows from tourism. We had a slump in flowers at some point. We were not exporting flowers, so we were not getting the dollars in at that time. I think there was a disruption with tea and coffee at some point. Those have reopened, and so obviously the dollars are not coming in. On the other side, because there wasn't a lot of transaction happening, for a lot of people, the dollar is a safe haven. That's where we keep money for stability, because the greenback is a hard currency, and its value is not controlled by the Reserve Bank. Its value is controlled by the market forces. So generally for Europe, for Africa and other places, people use the dollar as a safe haven. Sometimes in Asia, people use the yen, the Japanese yen. And so we can obviously see if people are not doing the transactions, the airspace was closed, people could not fly, people could not do deals, organizations were not working. So the only way to reserve money, the way to hedge, is to actually keep money in dollars. And that is why the deposits were getting higher, because for companies and for individuals, it's a safe haven. That's how you do hedging. That's how you keep the value of your wealth, by keeping the money in the dollar. And I think that informs the trend as we see it.
Pretty much. All right. The only question that we are actually going to ask, because if you look at that data as well, I mean, from March 2018 up to where we are right now, then you would expect that that could continue to rise. Do we expect for that trend to continue? Because yes, we're still within the grips of the coronavirus pandemic. Even our economic growth chances for this year are neither here nor there, Mr. Wahomengari.
We have a crossroads. We need to remember two things.
Yes.
Yes, the corona is still with us, but we have seen the reopening of the economy. When you look at maybe the flower exports, I think those have gone to their pre-COVID levels. When we look at tea and coffee, I think that has been sorted out. Tourism is obviously not running at that speed, but there's a general opening up of the economy. But on the other side, the external, the foreign investors are not bringing in the money because of the political environment. As we discussed BBI, as we head to the next general election, even if you look at the Nairobi Securities Exchange, we do not have a lot of external people bringing in the dollars into the economy. And for that reason, generally, I think the deposits will continue to rise, because people want a stable environment where they can be able to do their businesses.
Pretty much. All right, I'll beg that we move into the next part of our conversation this morning, where members of the National Assembly Tuesday made a commitment to enact laws that will form the framework for the regulation of the digital lenders in the country under the Central Bank of Kenya Amendment Bill 2020 that was sponsored by the late Member of Parliament for Bonchari, Obo Oyeoka, who passed Monday. Speaker of the National House, Justice Muturi, asked the National House to expedite some of the issues still pending on the bill in honor of the late Member of Parliament for Bonchari. Now, the bill covers, among other suggestions, regulating the interest charged on the facilities offered by the lenders, charges on penalties, as well as having them operate under the Banking Act. Now, the digital lenders are the biggest contributors to the numbers of Kenyans listed in the country's credit reference bureaus, with some of them blamed for their predatory interest rates and debt collection techniques. Good. How important will this regulation be to the banking sector in the economy?
Let's look at the environment where we're working, and sometimes we make a mistake of throwing the law at everything. If our memory serves us right, when M-Pesa came, there were many people who thought it needed to be registered, and it is not easy to register it against technology. When we had cryptocurrency, I think there's been a lot of people wondering, how do we register it on these? We have seen that in forex trading and all those things. Now, the challenge we are having is, even when we put bank interest rate caps, what did happen is that we got the micro lenders, the people mobile lenders growing in numbers. So yes, there is need to protect the consumer. But the biggest thing, the biggest win is not necessarily going to be registration. Registration does not win everything. I think what needs to be done is a sustained effort to get financial literacy rates up, so that people can learn to make informed financial decisions. Yes, we are dealing with technology, and technology is always going to be changing. So it is most going to be difficult for the law to be ahead of technology. So that's my view. That's the way I see it.
Yes. But Mr. Wahomengari, yes, we might say that indeed that we need to actually now sort of improve financial literacy within the economy. But is it not also a point of conversation to make sure that anybody in the business of lending within the economy operates within some sort of regulation?
That's true. We need to formalize the regulations. We need to formalize the agreements, but you can't formalize everything. I am yet to see a country that has law or shyrox. People have the lending mechanisms where they live, from the shopkeeper, from the village elder. So a lot of it, yes, we can try to formalize, but we will still need to understand there's going to be a sector that's not regulated. For example, we in this country where chamans are such a big movement with a lot of assets and resources, there's simply no law governing them as they function. But because it is our way of life, we have traditional mechanisms or neighborhood mechanisms how we continue in that environment. And that's where I'm coming from, to say you cannot register it on everything. Yes, I see the need to protect. There has been a lot of greedy lenders. This has gotten, I think, slightly over 14 million people to be listed on CRB. We need to regulate that because it is becoming very punitive, especially for young people who sometimes get listed on CRB when they are not even aware what is going to happen. Now, they miss the opportunities of getting decent jobs. They miss the opportunity of getting more credit. And so, yes, we need to be able to help out in that scenario. But in getting an informed populace will actually do more good than the law can ever achieve.
Yes. Is somebody going to disagree with you, Mr. Wahomengari, by saying, well, we need to improve digital literacy within the economy? Fine, that will continue to be a sentiment and that will continue to be a push, but what should come faster, Mr. Wahome? Is it improve that digital literacy, but also sort of incorporate that within a must regulation within the financial services sector? Because you can't have them roaming like that, Mr. Wahomengari, because yes, we do understand that they've introduced what we like to say is financial inclusion, but you can't let them roam, can you?
No, you can't. You can't. You must protect the people. The reason why people pay taxes and form a government is so that government is able to protect them from what they know and what they don't know.
Yes.
We know the dangers of Al-Shabaab, and we would expect KDF is going to deal with that, and that's why we give them the money and the wherewithal to deal with that. But on the other side, that's why we actually pay taxes to keep central bank running. That's why we pay bank charges to keep central bank running, and all the other mandolins at the Ministry of Finance and people who make the law so that they can protect us. Yes, they have to protect us. They have to look for ways and means to protect us.
I want us to look this morning at the number of mobile numbers that have been registered in the economy for mobile money, so they can actually give us a talking point as well. Because, Rich, if you have that data, you can actually run it right now. So we can actually look at it. Good. That is the average annual number of registered mobile money accounts. Mr. Wahome, you can actually note that all the way from 2017 to 2020, the numbers have been rising. And what happened within the coronavirus pandemic is that we're told, well, can you please adopt digital money, move away from this hard cash, meaning that indeed, again, we do expect, therefore, that majority of the transactions were going to be held digitally as well. Do you think that we've been dilly-dallying so much to the point that now this regulation is coming a bit late? And what is pushing for it is that the Member of Parliament who was sponsoring it, may his soul rest in peace, he's now passed, which is the only reason as well we're saying, well, let's push it further for his respect. Have we delayed so much?
My sympathies to the family. May he rest in peace. Parliament is an institution. It works with committees. We would expect that this is going to go on despite what has happened. Yes, there's a lag between the movement in technology. And it is a good thing that mobile uptake is very high in this country. I think we are one of the highest in Africa.
Yes.
The coronavirus has made it necessary, so we don't have to touch money. And I think that has helped in minimizing the infections. The financial inclusion is much better when everybody else can be able to come into the financial system. And that is why we need the law, because this is where we all get into. We all are comfortable with virtual money. We can do without doing physical money. And so that's why we need registration to be able to protect us. But it is coming a bit too late. But I must emphasize, it is not going to be possible to sort our problems with the law.
Yes.
We can throw as much law to every situation. But if people don't understand how to check out on interest rates, how to negotiate credit loans, we will still have the logs. So yes, we can be able to deal with the outliers, but we need to enable the people so that even as we get more financial inclusion, there is comfort and it works for the people. One of the biggest challenges, when you're talking about all these 14 million people on CRB, a lot of these people are purely on consumer credit. A lot of it is consumer credit. Yes, part of it was driven by COVID-19. People found themselves without a job, without income, but they needed food to eat and staff to pay. And so we're carrying a big burden. And obviously, as you see, even at the national level, when we're having a big discussion, we do not want to borrow and use this money for recurrent expenditure.
Yes.
So it is the same with the individuals, and this is where financial literacy and financial inclusion become important. Some of the people who've been able to succeed in these areas, they made sure that people are financially aware from earlier years in their life, so that even as they make financial decisions, they are well suited. They can say, yes, this facility is there, but I will not take it because it is not favorable. So that's why it is important for us to also look at that dimension.
All right, let's just look into just a little bit of what this bill that is sponsored by the late Bonchari Member of Parliament, Oro Oyoka, really has. It says that it wants the digital lenders in the country to be stopped from asking for steep lending rates. And if you look at where we are in terms of the CPK lending rates in the country, you're going to see that, well, they have been on a downward trend. In fact, they're historical low right now, despite us going through the COVID-19 pandemic. If we could look at that data right now in terms of the annualized average lending rates within the country, they have been dropping. But that's not the same case when it comes to digital lenders in the country, because some of them have lent up to annualized rates of 520%. Mr. Homengari, another one that the bill proposes is that, well, they have to seek approval from the Central Bank of Kenya when it comes to bringing in new products and pricing of the products. That is exactly what we want, is it not?
True, true. And that's what's happening for all other sectors of the economy. If you went to asset management and you're setting up a unit trust, you need to go through the same motions. If you have a banking product, you go through the same motions. If you are actually in the insurance sector, you go through the same motions. Yes, that's what we want. That's what we are calling the outliers, that we actually going to have this. Even in the banking sector, if I remember way back, I think when President Kibaki came into power, we have some rule that were introduced by the Minister for Finance, Mr. Mwiradia then,
Yes.
in different rule, that when the bank lends you, they can only collect X and not beyond X. And that becomes important. That yes, they can lend you, but there must be a maximum to where they can go. Because they've obviously devastated a lot of people. You actually just took 2,000 shillings because that's what you wanted. And you end up finding yourself owing 20,000. I mean, that kind of environment is what the law should be able to address. And that's why I said Parliament is an institution. I expect the committees are there, the bills are there, the process should go on. If that is in honor of the member who's gone on, that's quite in order, because that was great thinking for the person.
Let's take a short break, Mr. Wahomengari. Once we come back, you've mentioned something very interesting, that, well, you can fight it with law, that you can actually implement it, and then you find that you are not moving away from what it is that you want to achieve within a law. Financial literacy, where are we, and whose responsibility is it? Can it be an initiative from the government? And if so, where are we once we come from this break?